All right. Welcome to our new webinar. You know, our channel over the last year has gone through a lot of changes in terms of how we're approaching our methodology of teaching and our process. Obviously, everybody in the investing world should have a different process for how they're doing it. So first off, everybody who's looking for a magic bullet ain't going to happen. That's not going to happen. A lot of places will say there's a magic bullet for everything. Doesn't happen. What we're trying to teach is a way of thinking. We have always talked about that. I used to believe that the numbers were everything. If you understood the numbers, you'd be a great investor. Then I realized that wasn't correct. It's all about the emotional and the mindset part of it. That's like 80% of it. The numbers are kind of easier than the mindset because, I mean, at the end of the day, you're looking at companies and you're saying, okay, well, what do these numbers mean? What's going to happen in the future? I mean, we can all probably agree that Microsoft will be a bigger company 20 years from now than today. The question is, what's that growth going to look like? What are they going to look like in 20 years? So this whole webinar, this whole entire live stream is focused purely on how we think about investing. Now, you guys have heard me talk about principle-driven investing. This is the goal of this. So I appreciate you guys joining. In the past, I've asked where everybody's from, but I think we realized we get a lot of people from all over the world. I was coming back from Spain last week, and I was very fortunate to be on the plane, and somebody I had messaged on Instagram, actually, he saw me and he's like, Paul, we had a great conversation. And ironically, one of the things he said to me was, I wish your videos were longer. And it's funny because in the last 6 months or so, we've been saying, you know what, our longer videos do better. And we enjoy the longer videos because we like giving more information and talking more about mindset throughout the videos. So that's a very, very important aspect for how we're looking at the world and looking at money and investing. Now, the great part is my principle-driven investing process, it can be applied to anything money related. Anything you're investing in. It doesn't matter. It doesn't have to be stocks. It could be real estate, investing in smaller businesses, investing in bonds even at some point. But we're going to go over these things because these principle-driven investing tenets are the foundations. If you deviate from these, you're more likely to lose money. Okay? That's it. Because we can all agree that we've learned on the channel that a PE of 30 doesn't make a company expensive. A PE of 5 doesn't make a company cheap. What matters is, what does the future look like? And since the future is unknown, we have to sit there and have the emotional fortitude and that principle-driven investing approach to be able to stomach what happens in the future that might not be directly in line with what's going to happen and what we think was going to happen. Okay? That's the whole point here. Along the way, there'll be questions. Before I used to have, the chat up so I could see the questions. That's not going to be the case this time. Please still put your questions in. I have Tim and Nick back here. They're going to observe the questions. We want this to be a very positive discussion. If you have any personal experiences that validate or counter some of our points, please bring them up because, one of the things that I've struggled with in my investing journey is the difference between a speculator and investor and what makes something an investment versus speculation. The reason I struggle with it is finding the right definition exactly for it. So that leads us to our very, very first tenet. Our very, very first tenet. Actually, before we get there, I do want to say some things about this channel. So also on this trip, I was on a cruise, and I ran into an older guy, and he looked at me, he's like, man, you look familiar. And I was like, oh, okay, cool. We played chess. Very end of the trip, he comes up to me, he goes, now I know where I know you from. He's like, you told me to fire my financial advisor. I was like, yes, I did do that. And he's like, where are your glasses? I was like, well, I'm not wearing them. But he asked me a question. He's like, what got you into this YouTube channel? And I said, well, it's interesting. I taught at my high school for free for 8 years, one class every other Friday where I teach about life, business, investing, mindset. And the two things that I focused more on was mindset and life, because I do think those are far more important to understand to live a high quality life. YouTube allows me to do that and allows me to make money doing that and change people's lives. And of course, some people are going to disagree with me. Some people are going to hate me. Some people are going to love me. It all depends on where we're at, right? This is why I choose to teach. Is it lucrative? Of course it's lucrative. We're not here to Bill Gates still charges for Microsoft Windows, even though he has an ungodly amount of money. That's not the point. The point is, I'm here to teach something that I know for a fact can change people's lives. It's going to change people in different ways. I have a lot of people I respect in the investing world. There isn't a single one of them that I agree with wholeheartedly, 100%. It's not possible because I still take things from different people and mold it in my own way. You might listen to all this and say, Paul, I think you're missing out on a couple of tenets of what I would think would be part of principle-driven investing. I'd love to hear it because we're always trying to make this better. I've modified the 8 pillars. The 8 pillars started as 8 pillars, but we changed 2 or 3 of them as time went on. So that's a big thing for why I do YouTube. Now, first tenet of principle-driven investing. We are investors, not speculators. This is a big, so investors versus speculators. Guys, the issue is this. Most people confuse these. They use them interchangeably. Well, actually, most times it's speculators saying they're investors. Just because you deploy money into something does not make you an investor. That doesn't make you an investor. Chasing trends, chasing hype, that doesn't make you an investor. In fact, the very Bible of value investing, the very, very Bible of the intelligent investor, I don't even agree with their definition of investor. Their definition is something along the lines of, if after thorough research and a lot of analysis, you sit there and find something that offers, safety of capital and a return on your capital, that's an investment. I'm like, well, you ever listen to a Bitcoiner? They say, hey, I've done the research and Bitcoin is the way to go. It's the best thing ever. Just because you do research doesn't mean you're investing. We confuse what research is. That is not what an investment. So to me, the very Bible of value investing, I don't even agree with their definition of investment. I used to say it, and then finally one day I'm like, why am I saying this? I don't agree with this. Everybody thinks they're doing research because that's how you justify deploying capital. That's how you do it. I remember somebody recently, and I'm not going to get into the exact conversation what was said, but somebody on Instagram was talking about politics that I'm friends with, and they said something that was actually true of the one candidate and not the other candidate. I said, did you do your research on this candidate? Oh, tons of research. I'm like, well, when you did the research, you would have seen this, and happen. Completely silenced. They stopped talking to me. I was like, they literally got it mixed up. So they confused their love for somebody as research because they followed them and loved them, right? Now, I'm willing to sit there and say that, a guy like Donald Trump, who I voted for, arresting people for burning the flag is absolute lunacy. That's what I mean. It's about being able to say, hey, I might like this person, but this part of it's crazy. Same with investing. I love this company, but the valuation's crazy. That's a part of investing versus speculation. With investing, if you understand the fundamentals, this is the way I like to look at it. If the market for that asset went away, what would you rely on to make money? So for example, I just posted on Twitter yesterday. By the way, follow me if you want to on Twitter, @EMPaulG. But the worst shark, the second worst shark out of all the sharks, Kevin O'Leary, just spent $13 million to buy a Kobe Bryant and Michael Jordan basketball card. And he said, and I quote, I've invested in basketball cards. No, you haven't. You've speculated into basketball cards. Because if the world of card trading goes away tomorrow, how would he make money on that card? He wouldn't. And I always tell people, when somebody says, well, what about stocks? Okay, let's say you own 10% of the stock of a business and the market goes away. You still own 10% of the business. And as the revenue goes up, as the profit goes up, as the cash flow goes up, they can give you distributions. And if 20 years down the road, revenue, profit, cash flow is up 30 times and the market suddenly reopens, what's that asset worth? Probably 30 times more. But I can generate money along the way. My net worth can still go up. If the market goes away for basketball cards or Bitcoin or gold even though gold has an alternate use besides a store of value, for all these things that don't generate money, what's it worth? It's not worth anything to you. And that's kind of the way I look at it. If you need somebody else to pay you more money, and that's how you make the money, and that's it, there's no other potential for it, that's kind of a way of speculating. With the basketball card, if all of a sudden everybody hated Michael Jordan and Kobe Bryant, that card's worth a lot less money. A lot less money in a hypothetical world. Okay, now, does that mean I don't believe in buying basketball cards? And no, I buy rare books, I buy artwork, I buy basketball cards, I buy these things because I do know that they can go up in value, but I don't sit there and say I invest in them. I sit there and say, listen, a few years ago, I talked to my brother about buying a copy of the Constitution that was coming for sale. That's not investment. That's speculation. I said to him, listen, there's only 7 of these things. There was something like 9 of these things, something like that. I go, this is one of like 4 that's available for sale in history. We should put a group together and try to buy this. And guess what? If all of a sudden the world ended tomorrow, I mean, not the world ended. If all of a sudden the market for Constitution goes away, what's going to happen? That thing's going to be worth nothing. So it's not really investment, it's speculation. Now, I get that the lines can be blurry at times, but this is a very, very important thing I want to discuss. Now, that's the problem with it. Okay, well, how do you get around that? How do you get around that first problem that people have in losing money? Well, first off, I want you to think like an owner. When you buy a stock, you're buying a piece of a business. When you buy a piece of real estate, you're buying a piece of a business, essentially. That real estate generates cash. If you think this way, you're able to sit there and say, okay, if my profit, if my cash flow goes up, I don't need to worry about the market price of the company for a long period of time. I can worry about, and guys, don't forget, when you own a stock, you have a right to the cash in the account. That's why I always tell people who are dividend investors, when they think they're getting a dividend, that it's free money. No, you're taking money out of an account that you control, that you have access, that you have ownership of, and putting it in your pocket. But along the way, you're paying taxes for a second time. This is the way I want you to think, though. This isn't a hope and dream that the stock goes up. If you are hoping and dreaming the stock goes up, that's speculation. Because guess what? You can speculate into investments. If the speculation is based on no fundamentals, if the investment's based on no fundamentals, it's essentially speculation. It's hard to invest into a speculative asset. It's easy to speculate into an investment asset. If I'm sitting there and buying Workhorse because I think they're going to get the U.S. Postal Service contract, and that's speculation. Now, I might have some inside information that might be, but that's illegal. But either way, I bring up that example because one of our cohorts that I'm not going to name, Stock Mo, he did that with Workhorse. And I look at it going like, that's not investment. That's not investment. That's very, very important. You guys understand? No, by the way, Value Seeker, I'm sure your 1976 baseball cards are worth way more than $1. I like Robert, I like Damon John, and I like Lori Grenier pretty equally, but I think Robert would get the advantage. So Value Seeker, you said, I say an investor understands downside risk versus a speculator. Well, a speculator might say, I had somebody reach out to me about Bitcoin and said, Paul, I'd actually buy your points on Bitcoin, and there is a lot of downside risk to Bitcoin, but I still think it can work. Great. They understand their down. He's like, I think it could go to 0. And I'm like, oh, okay. They understand their downside risk. I don't think that means it makes them an investor, but I understand unless you have inside information, it's speculation. Sure. Yeah, I don't know. So that is a very important part of the first tenet. We're investors, not speculators. Okay. The second tenet, and you guys have heard me say this before. I'm sure a lot of people can repeat this. Every investment is the present value of all future cash flows. Guys, remember when I did the interview with Guy Spear? We went to New York. We gave Guy Spear one of our boxes of like goods, merch. And in it, on the top, it said, every investment's the present value of all future cash flow. And his right-hand investment lady laughed and said, that's absolutely true. And I loved hearing that because we don't hear many people say those exact words. But she immediately knew what that meant. What that means is you have day one in an investment and you lay out $5. That's why I put -5. And then every future year, every future day, it's going to lay out some sort of cash, like 1, 1, 2, 4. If this is the lifetime of the investment, you can do an investment calculator in Excel, and it'll tell you the present value of this money, what your return is, the IRR. Okay. Now, the higher this is, the higher your IRR goes. The lower this is, let's say this thing costs you money, the lower your return. Every investment, oh, and by the way, the other thing is, if this was 4, 4, 8, 14, and instead of paying $5, you pay $1, it's a lot higher investment than if you pay $10. Every investment is the present value of all future cash flows. Guys, the cash flow could be this, 0, 0, 0, 140. The cash flow could be -5, 10, 1,000. It doesn't matter that it might lose money all along the way. My best real estate deal ever, I paid full ask price, It didn't make any cash flow for 2 years, and it's making me 40% returns because I knew that cash flow was going to be explosive after year 2 once we were done with all the renovations. You can't look at it as just negative cash flow equals bad investment. Positive cash flow equals good investment. Not at all. We talk about returns on capital. A company with a high return on invested capital can invest money in the business and generate really high returns. That means they're going to increase their cash flow over time. If you increase your cash flow over time, it increases the present value, the current today dollars of that investment. Does that make sense? This is very, very important. The problem is a lot of speculators will focus, a lot of retail investors out there will focus on stock price movement, not the fundamentals. Guys, you'd be surprised how many people don't realize that you can look at the fundamentals of a business. You can look at the balance sheet, you can look at the income statement and make some sort of determinations of what the company is worth. Now remember, that present value, we don't know the future. We don't know what the stream is going to be. We have no clue what it's going to be. All we can do is make educated guesses. And guys, as you've seen, this is exactly why on our stock analyzer tool, let me pull up a company. Let's pull up the company, NVIDIA. This is why stock analyzer tool has 3 different levels. Guys, we don't know what the future is going to be. I'm going to put a low, middle, and high number and think, okay, let me be conservative, let me be aggressive, and let me put what I really think is going to happen. And somewhere in that range, it's going to be a wide range. The wider these are, the wider each category is, the wider the outcome is going to be. That's expected. The more you understand the business, probably the tighter you can make all these assumptions. That's why I personally like to focus on bigger companies because I don't want to have to make really wild guesses on things. I want to buy when it's pretty freaking obvious. Now, that's the problem. So how do you win? Well, you win by you create these future cash flow estimations and you just say, listen, I'm going to have a certain return here with my margin of safety. And the more I understand the company, the lower margin of safety I need. The less I understand it, the more unknowns there are, the higher margin of safety I need to do it. It's having a process of evaluating businesses. Now, you're watching. I'm watching. We're all watching. We all have different areas of expertise. Dalton figured out a way today to bring NVIDIA and oil into the same conversation. Is Dalton on this? Dalton just had a kid the other day. 2 weeks ago. I don't think he's on the live stream. He took a little paternity leave. And today he texted me and I go, and there it is. He's back to energy. He laughed. I was like, how do you do this? Dalton loves and understands energy completely. That's very, very important to him. His understanding, for me, the cash flows are too up and down. So it's hard for me to really estimate what those cash flows are going to be. But that's why Dalton's going to probably do better than most investors because he picks a very, very tough companies to understand. That's how you have to sit there and do it. To understand that when you buy something, if you're buying a mismatch on future cash flows, that's how you make money. Remember, guys, look at these companies. Look at a company like NVIDIA. This is the last 1 year. A low of $92. $86 is the low. $86. Is that correct? $86.62. A high of 184. In 1 year, the world's largest company, over 100% difference in stock price. Don't tell me this company changed value by this much over 1 year. Impossible. $4.5 trillion company fluctuating over 100% in 1 year. If you absolutely think that the market price is the value, it's not going to work. It's not, and I want you to look at, and this is something I learned from Little Book That Beats the Market, Joseph Greenblatt. He said, go look at these companies and how they fluctuate in 1 year. Come on. And I'm like, oh my God, he's absolutely right. A company that's let's look at BP. What's BP? BP is a very, very boring up and down company. Very different. 1 year chart. A high of 35, a low of 25. That's a 40% difference from here to here. 40%. And this is a very boring company with a tight trading range. And it's a 40% difference in 1 year. Use Mr. Market as your friend. And if you understand that second tenet, that every investment is the present value of all future cash flow, when the stock is down a lot, very quickly, you can realize, okay, let me stay grounded here. Any questions on that? Okay, here's Hans. Oh, Hans, I think you're right there. This is what I have with Palantir. What Hans is explaining right here is exactly what happened to me with Palantir. And it's a great point to pull up. Palantir, it was at $45 in February of 21. One of those internet hypesters is an idiot, said it was going to 500. I said I would be interested sub 5. It went to 583. I never bought it. Now, I also like being stingy. It helps me with my anxiety. But now, what did it go to? 190? What's it at right now? 140? Yeah, do I wish I'd paid 583 for it? Freaking, you know, of course I do. I like to go back in hindsight and say, Paul, put the farm on it. And guess what? I still feel good saying that it was at 5, that it was worth 5, less than 5 to me, and almost went to 5. It still feels good to say that because this moron still thinks it's a $500 stock, right? I'm looking and going, okay. And this is what happens. This is what happens. Google, my buy price was like $80 and it went to like $83 and change. And now my buy price is like 140. Okay. This is what happens. But sometimes it works in your favor. You start buying it at 80 and it goes to 70, 60, 54, and you get to buy along the way. I like the idea, even though Hans brings up a very good point, I like the idea of being strict about your rules. Okay. So problem number 3, tenet number 3. If we don't understand it, we don't invest in it. Now, let me explain to you guys what that meant to me when I used to hear it. I used to hear Warren Buffett say that and thought it meant if Warren Buffett doesn't understand how a GPU works and the inner workings of the technology, that he wouldn't buy it. That's what I always thought it meant until probably like 10 years ago. And then I realized what it really meant. What it really meant is, does Warren Buffett believe that he can reasonably predict the future of the business? He was against tech and .coms back in the late 90s. He said, listen, I don't know what they're going to look like in 10 years. Who's going to be the winner? Who's going to be the loser? I think that same way with AI right now. Yes, NVIDIA's leading the way on AI chips, but is that going to last forever? We're really early in the business. Tesla was riding it high for the longest time, and now they're losing a little bit of market share. These things are, when they're not less established businesses and industries, that can cause a problem. So the idea of we don't invest in it, if we don't understand it, we don't invest in it is, can you reasonably make predictions about the future? That's the question. In your stock analyzer, are you just sitting there going like, what the hell do I make these assumptions for? Banks, insurance companies, I have no idea. I don't understand them. I don't know how they make money. I don't know how they lose money. I could never make any sort of assessment about the future. I avoid them for that reason. UNH, I'd love to be able to understand, because I do think there's potentially a lot of opportunity there. I always said in previous videos, before Buffett and Burry bought, I said, I wish I knew insurance because I want to be able to analyze UNH. And they bought. Who knows? But this is very, very important. Most people get lured into companies because they think it's fascinating, it's exciting. Therefore, they're doing... Listen, talk about Palantir. I'm apprehensive about Palantir because I've seen some financial questions in the past, and I go, do I really want to be involved with that? And their CEO is kind of a loose cannon. It's funny to me that people harp on Elon Musk for being crazy. I think Alex Karp is pretty freaking crazy, right? And I look at this saying, okay, well, I don't know if I understand fully why their free cash flow is so much greater. I'd rather have their free cash flow greater than net income. But I worry that they're just focused too much on making the stock price go high versus long-term shareholder growth and value. But that could be me. And I don't know where Palantir is going to be. And I can still make assumptions about it based on their projected growth here. But these are the things I have to think about. And at some point, if there's too many question marks, then I just got to pass. I thought this was brilliant. A few years ago, I saw Warren Buffett show the Lehman Brothers prospectus that came across his desk during the financial crisis. And he said, look at all my questions here. He's like, the second I had these pages filled with questions, I was like, yeah, this isn't for me. There are too many questions here that I have to ask. And he said, it wasn't for me. Now, with that said, when there's a lot of hair on the deal, it means the stock price falls, the investment price falls. But that's why you got to find somebody who understands the hair on the deal. That's the question. That's the real question there. So guys, how do you do that one? Stay within your circle of competence. If you can't explain how it makes money, you won't be able to explain how it's going to lose money, and so don't buy it. If you don't understand how it makes money, when the stock falls, you're going to be afraid. So you've got to sit there and feel so. A piece of real estate right now, if you told me tomorrow that my apartment building was worth 10% less than it was the day before, I'm like, okay, great. I'm still going to drive the revenue and profit up. And I know that 20 years from now, if I get revenue and profit up 10x, it's going to be worth 10 times more. That's it. It's very simple. This is not some sort of, it's investing is simple, not easy. Keep it simple and focus on the things you understand. That's how you win in that game. All right. Pardon me? There you go.
Yeah, Mr. H93 has a question, Paul.
Do you believe that a contrarian investor should focus more on companies that are losing money for a year or two, but has a good future path or something profitable being mispriced? Mr. H93, you know what's great about this question? This is where I changed in the last few years since we started the channel. I used to want to find the struggling companies that were mispriced, the Michael Burry method. Now I like the Philip Fisher method. Philip Fisher wrote a great book. Common Stock and Uncommon Profits. Everybody should read this book. This is the Charlie Munger method of investing, which is find a great company, try to price it, and buy a great company that's still growing. That's what I like to do. I don't want to do the work of having to worry about, are they missing? Are they making it? What are they doing? Blah, 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 blah. I don't want to deal with that anymore. I'm too lazy. We made a video recently where I talk a lot about my change in mentality. The answer to your question is both can be contrarian investors. It's just whatever fits your personality better. With real estate, I like to buy the turnaround situations, the shitty properties that need a lot of work and lose a lot of money that I can turn around. For some reason in real estate, I love it, probably because we control the deal. I can control the outcome. In stocks, I can't. I got to rely on somebody else, some CEO to do it. Oh, great. Value Seeker loves the book. That's great. So it's all about the individual investor. Burry bought GameStop at $4 and sold it at 20, and then it went to like $4, whatever it went to, some certain number. That was a losing business that he saw is mispriced. And he 5x'd his money or something like that. I actually like Inquisitor. Yes, on our 24/7 channel, we'll be covering the NVIDIA earnings call. Y'all both. I didn't pronounce that correctly. Do you think passive funds are inefficient because they buy at any value? No, I do not. Because they buy at any valuation, which means they're overpaying and underpaying. Or in the long run, you pay the exact price of the market. That's what I love about ETFs and passive funds. I love it. Oh, I don't agree. Ivo, I don't. I like stocks outside of the U.S. Absolutely. And you're right. There is way, way more bargain internationally. The U.S. is the most overpriced market by a long shot. Like, not even close. I've had conversations with Dalton saying, Dalton, we need more international exposure. And guess what? I own companies internationally. I can't really discuss them. Is that big enough?
I think it is. I can look it up for you right now, too. If you text me the ticker.
I don't know the ticker. Guys, hear me out there. I own a company in Mexico. I don't know the ticker. I just found it. I sent it to Dalton. I said, I like this company. Let's do some research. We did. It's a company that owns a bunch of airports. And I like it. I like the numbers. I like the future potential. I did a discounted cash flow model. It worked for me. Boom. I own an auto parts business in Europe. I love Louis Vuitton. I don't own them yet. But the other thing is I like to sell covered calls, and that's easier to do in the US. That's a big reason why I have US stocks. That's what I like. Okay, so problem number 4. Guys, our fourth tenet is, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. And I love bringing up these examples right here. Cisco is my favorite example ever. In the short run, stocks are a voting machine. In the long run, take this part out. Delete that right there. What did Cisco do? It was a steadily growing business. And guess what? From here, 2000 to 2020, revenue increased 4.5x. Profit increased 5x. Apart from this bubble right here, the tech bubble, it was a very normal business. And it's not selling for some cheap amount. 20 times free cash flow, 25 times earnings. This is what's important. In the short run, Stocks are going to do, the most popular ones are going to go up, the least popular will go down. But in the long run, the fundamentals will drive it. The weighing machine. What's behind it? What's behind it? Look at it as weights, just in general. In the short run, if I eat a hamburger today, nothing's going to happen to me. My weight's not going to, in fact, I could lose weight if I run enough. But in the long run, if I don't run enough and I just eat hamburgers and junk food all the time, what's going to happen to my weight? That's the point of all this. It's the same thing with stocks. In the short run, stocks, whatever I said, look at NVIDIA, 84 to 188, all in 1 year. Not even 1 year. It was like 6-7 months. The world's largest company, the biggest company in the world, fluctuating over 100% in 1 year. Come on. Palantir. Look at Palantir. Look at Palantir. The hot stock of the year. 1 year, 400% increase. Guess what? That's 5x the money. Let's see how their revenue's done the last 1 year. 2.9 billion to 2.2 billion. Is that 5x? No. Okay. What about the profit? 209 to 460. Is that 5x? No. This is what happens. Now, it could have been massively undervalued before, which I think it was at 583. I think it was undervalued, and it's catching up. But is it worth whatever it's at right now? Maybe. Guess what? Let's say Palantir is worth $50 today. I don't know what it's worth. I haven't run the numbers in a while. Let's say it's worth $50 a share. If the profit 20 years from now is 20 times greater, I would tell you that it's probably going to be $1,000 stock, give or take. Could it be higher and low? Yeah, of course it could be. But we're not going to be talking about Palantir being a $50 stock anymore. That's the point of all this. In the short run, stocks are a voting machine. You're just competing. You're just seeing what the average person out there and the passive investors, because when people are investing passively, that money's got to be deployed at some point into those companies. And that's what drives it. That's what drives up those prices. And when they sell, that's what drives down the prices. What's so funny?
Sorry, we're still laughing at Hans's comment from a couple minutes ago.
Yes, it's big enough on his pants, that one. Yeah! Hans, come on, we're trying to teach people. Hans is a very nice gentleman. So, Evo, if you bought a stock, it went up, and after that, with your calculations, you get less than 2 to 3%. You just sell it for bonds that a company. So, you just get overvalued. So, Evo, this is a lesson. Guys, the best lesson I learned in my life was don't sell a stock because it's overpriced if it's a great company. I sold Microsoft at 60 because I thought it was worth 50, never bought back in. I sold Facebook at 195, not because I thought it was overvalued, because I thought it ran up too high after I bought it literally at the bottom of 88, and now it's at 700. These are things to learn. And my lesson, like I learned with Sprouts Farmers Market, I don't think Sprouts is worth 160. I got it taken away from me. My covered calls at 160. I think it's worth 80 to 100. Now it's far below 160, so I'm happy about that. But if you buy a good company, let it run. Let it run, in my opinion. But if you have that 2 to 3%, you have a company that has a 20% potential, consider selling it. That's my opinion of it. That's when you should sell stocks. Oh, value seeker. Isn't that so sad? It's so sad for us. Now, guys, how do you win in the short run thought process? Well, very simple. Change your scope to long term. Guys, can I tell you something? I do not look at my brokerage. My brokerage requires me to wire money in and out. I'm buying real estate, so I wire money out of my brokerage. You know what I do? I literally log into it and I cover the balance. And my brokerage is up. Why? Because stocks are up. But I don't want to get stuck on loving my brokerage number and hating my brokerage number. I want to make good decisions. I block my own brokerage. In fact, I've emailed my brokerage and said, is there a way to block the number? They're like, yeah, sorry, we can't do that. I was like, damn. Why? Because I want to think only 20, 30, 40 years down the road. And you might sit there and say, well, Paul, you're 44. What are you going to need 40? I still want to think 20, 30, 40 years down the road, 50 years down the road. There's talk that in 25 years, we'll be able to reverse aging completely. I could live for till 150 or 200. I'd love that. So anyways, this is a very important aspect. Business fundamentals matter way more than daily stock votes. Way more. Way more. Guys, the fifth and probably most important tenet of all of this is something very, very important. A great story can become a bad investment if you pay the wrong price. Have I shown you guys Cisco lately? This was the company in 2000. You were stupid if you criticized Cisco. $500 billion market cap. Guys, I'm going to, can we put my screen? My screen's on here, right? Oh yeah, obviously it is. Cisco first $1 trillion company. If you just Google that, February 2000. Oh shit, I have to log in. Screw that. March 28th, 2000. This is from March. This is after the tech peaked in March 10th. Cisco market cap rises to top spot. Microsoft drags out indexes. People were saying Cisco's going to be the first $1 trillion company. They never hit it. They never hit it. Even today, and they had how many shares? Today, their market cap is $275 billion. Now, you might sit there and go, wait a second, how are they almost at the same price, but the market cap's so much lower? They bought back a ton of shares. What were the share counts back? Now the share count is 4 billion. Back in 99, it was 6.65 billion. So they bought back a lot of shares. Everybody's like, this is going to become the first $1 trillion company. Yeah, maybe. Maybe. But guys, we've heard this every we get so excited about great stories. This is a great story. This is a great company. They're going to do great things. Yeah. The internet was a great story. Cars were a great story. Airplanes were a great story. Radios were a great story. TVs were a great story. Eventually, the story runs out. And if you pay prices that are only based on a great story, you're basically saying no price is too high if you don't buy based on fundamentals. This is so important to understand. Till you're blue in the face. And guys, you might sit there and say, well, Paul, you've been saying this. Yeah, you're right. I repeat it all the time to myself. I'll be driving with my wife and I'll say, look at these, like, we'll pass like something. And I'll say, yeah, that company 20, 30 years ago was like the it company. I mean, look at Kodak. Look at Kodak, Eastman Kodak. Who would have said cameras are going to go away years ago? Oh, damn. Doesn't even go that far. But look at that. Printers are struggling. Remember zip drives? I remember zip drives. All these things these are all great inventions. Oh, that's funny, value seeker. Tulips are in serious value territory again. For those who don't understand the reference, it's a tulip mania in the Dutch in like 1650 or something, where tulips were going crazy in price. The 17th century Bitcoin. Kodak Black, that's right, that's funny. So guys, the problem is people chase hype because the hype is the fun story. The hype is the great story. But the hype is usually wrong at some point. Now listen, some companies can still do great. Look at Tesla. Tesla's still at Amazon. Amazon fell 95% from 2000 to 2002 or 3, and then just went on a tear. And along the way, it appeared to be very overvalued, but it grew into that value. But where's Amazon gone the last 4 years? Basically sideways. Where's Tesla gone the last 3 or 4 years? These are important things to understand. A great story can become a bad investment if you pay the wrong price. Price determines whether it's a good investment or not. That's it. And guys, I've been with bankers and stock people, and they don't understand this concept. This is so important, but this is the number one way in which people lose money. This one thing, because they attach themselves to a story, and the story is wonderful. Guys, these are the 5 biggest problems. This is why I have my principle-driven investing approach. There's an answer to these 5 major problems. And these aren't things that happen overnight. And guess what? Even when you absorb these, you got to repeat them over and over. You got to keep that going in your head. It's absolutely important. Investing done simply is going to be done better. What do we got now, Tim?
Well, hey, we have a guest that's going to come on. One thing we're doing is we're just increasing our human interaction as well as celebrating community wins. So we're having an awesome community member, Arlen, come in. So Nick, go ahead and bring him in. Here we go. I think Nick will get his screen adjusted, and then you can chat with him, Paul.
Will I be able to see him?
Nick can't zoom. Go ahead.
Hey, Paul, can you hear me?
Yes, I can hear you.
Okay.
Can you hear me? Can you hear me?
Yeah, I can hear you.
Arlen, what's going on, man? This is Arlen, guys. He is a member of our community. Arlen, how long have you been a member?
21, 22. I forget the exact date, but
Oh, wow.
yeah,
You're one of the originals.
yeah, pretty close to it. Yep. I
So,
remember holding off for a couple months, and I eventually bit the bit, and I just said, it's too much missing out on. I can't do it anymore. I have to get on the inside.
oh, that's great. That's really good. And so what drew you to, so how'd you find the channel and what drew you to the whole, like, so was it something that you were thinking about before, or was it something that you watched the video and just said, oh, wait, that makes sense? Like, how was your, immersion into quote unquote value investing?
Yeah, so I found it through another channel, and YouTube kind of did its thing, and it popped up another video from EM, and it just clicked with what you guys were saying. It just everything made sense, and so I said, okay, well, let me hold on for a little bit. Let me see if this is actually legit. Um, and then it was like it just made sense. I mean, you look at the numbers, you look at everything, it just made sense. Um, so much so much to the part of I actually I started studying for my Series 65. Um, I'm currently in real estate, but all of this happened because of the EM community, and I was never putting money into my 401k. Now I put 30% of my paycheck into my 401k, and
Whoa.
I manage all of it myself. Um, because I'm real estate, I'm commission based. I do have an hourly, but I am commission based. But all of it I manage myself because, like you said, the financial advisors out there they just have other interests in mind. The fees are ridiculous. Just all of it is ridiculous. So I said I could definitely do this on my own. With the community help, of course, it just makes sense. It's not rocket science.
No, it's not. So what percent of your portfolio is ETFs versus individual stocks?
Um, Interesting. So for my current employer, it's 100% in ETFs because I am restricted to buying ETFs.
Oh, okay.
For Yeah, for my previous employers, I am 100% in stocks.
That's great. That's great. Listen, everybody knows I'm a big believer in ETFs. And so do you like owning the ETFs? I mean, obviously we've had a good bull market the last 4 years since you started in the community. And I'm sure your stocks have done quite well, but do you like the idea of owning ETFs? Or you kind of wish you could do individual stocks with your current employer 401k?
Yeah, I mean, I wish that the ETFs had more of growers. I mean, I know there's small cap stocks, but there's got to be it just if you look at the individual stocks in the ETFs, they have some stocks that are just massively overvalued.
Yeah.
Um, some of the Max sevens that are just, I mean, it's not a question of if, it's when the market is going to correct. And so I know that the ETFs are going to go down because they have such a massive hold on those ETFs. I'm fine with ETFs long term. Um, but to that point with ETFs, you can always play the inverse, you know? So, yeah.
That's good. So, what kind of companies do you use our software to research? Like, is there a specific type of company? The third tenet of if we don't understand it, we don't invest in it. Like, what do you consider your, what do you consider your? I should say this: before Everything Money, what did you like? What did you look at, and has it changed since joining Everything Money? And what is that now?
Before joining EM, I looked at nothing. And
Oh,
after joining EM, I looked at everything. Um, I
okay.
have my own. The only thing that I do not look at with the stock analyzer is more financial services company
Yeah.
because it's based on different metrics.
Yep. God,
But
it's
I
like,
still know how to do it thanks to the EM community.
thank you so much for saying that, because that's a very important thing I discuss about. I'll have people message me and say, "Hey, Paul, what? I try to put a bank in here, insurance company, and said it's a good buy." I'm like, "Listen, They're different metrics altogether. And I'm glad you heard that, because that's a very important distinction to make between companies.
Yep.
That's
Hans
absolutely,
is there to hold your hand for everybody.
yes. Good. So, the principle-driven investing idea has become, these 5 tenets that I talk about, has become more about the last like 6 or 9 months, that, it's just like 8 pillars. It started with like, okay, what are the things I really believe? And it came out to 5 things. So of the 5 tenets that I just talked about today, does any one of them specifically speak out to you? Or is it kind of like, are you like me, which is like every single time I read one, I go, that's the best. And I know that's, and I truly, so how do they help you? Which one's your favorite if you have one? I'm not trying to put you on the spot for that, but everybody has a different one that speaks to them.
Yeah, I would say it's kind of, I mean, it's definitely all 5, but it's a mix of 2. I think that the first thing I try to do is understand how they make money.
Yeah.
And if I don't understand it, then I don't buy it.
Oh, that's great.
And then once I understand how they make money, then it just goes to the present value, because what, what's everything is predicated off the future. So you have to figure out what their future is going to look like just based on their current cash flow. So yeah, I would say those 2 are, but I mean, all of them are equally important.
I appreciate that. So, not to put you on the spot, but do you want to go through one of your, maybe you have a stock you want to talk about specifically, or do you want to show us what you think your best upside stock is from now? Share with the people. And again, everybody, don't buy it just because we're talking about it. But what's one stock you want to go through on the stock analyzer with me?
So I have, let me see, to kind of bring in the options part. What do I have recently that I've already made back on? Yeah, go over Southwest.
Oh, Southwest.
Speaking about that, I'm at an airport right now, actually.
Oh, what airport? I shouldn't probably say. Where are you going?
I'm in Panama at the moment. I'm going to Ecuador.
Oh, what are you doing? What are you doing? Are you on a trip, or is it for work?
Just family over there. I live outside of the swamp right now. I'm in Virginia.
Wow, I was gonna say you're a pretty pale ginger there to be from Ecuador or something like that. That's probably pretty rare to have a redhead over there, is it?
Yeah, 100%. Yeah.
So Southwest Airlines. I know what's interesting about Southwest. I love the fact that the community doesn't agree with me. I actually love the fact that the community doesn't agree with us, Arlen. Look at our community members have voted this to hold. And tell me your bull might be exactly the reason. Your bull case might be my bull case, and then tell me your bear case on it, and show me your assumptions on the stock analyzer when we get to it. First, tell me like what attracted you to Southwest.
So part of it is because since I do fly, I kind of understand the customer experience part of it. And I've been seeing the trend overall with airlines. The thing that actually I learned from you was the credit card, which is yet another point in generating revenue. But hedging their fuels, the credit cards, I think their customer experience is going to get better, which is going to draw more customers in. And then not only that, with them, this is actually something that even the airline that I'm taking today, like they're cutting back on food, they're charging for more luggages, which Southwest is kind of like semi early on the stage, but not really. Like there's other airlines that have done it, but it's all bringing in the whole big picture of, okay, what are the little pieces going to change and what are they going to affect over the 5, 10, 15 years? Because again, if we're looking at long term, okay, if I make 100, 200% in 2 years, then okay, maybe I'll reevaluate and maybe I'll reduce part of my position. But long term, if they're going to be making 15 to 29% IRR, it just makes sense. Like it's not rocket science to look at, okay, where's the airlines going overall? And like you said, they were profitable the whole time. I mean, if they're looking at 2% margins all the way up to 10%, okay, maybe say we get halfway there. if we get back to 5 to 7 or 5 to 9 or whatever it is, let's kind of take it back a little bit and then make assumptions on those. And I mean, the stock analyzer is green all across the board, so it's hard not to miss.
Yeah, and that's what I say to everybody. I said, this is a pure margin play. Like, their margin's been so low. They just get back, like you said, to high single digits. It's a no-brainer from here. So, so tell me this. What's your biggest bear case about Southwest? Like, what makes you go, but this is still my issue with them. Obviously, nothing's perfect. So what's the bear case on Southwest for you?
So bear case, I would say, is customer service, because the majority of their revenue is going to be coming from both hedging fuels. I don't know quite how much the credit card is going to come into increasing their margins. Because if we're talking about margins, that's what's important. Fuel hedging and then bringing customers to the airline rather than scaring them away.
That has been an issue. You're right.
If baggage costs are going to keep going up, okay, where is that cash flow going to go? Because people are going to fly regardless. Is it going to go to XYZ airline? But the thing that doesn't really worry me specifically for baggage costs is that all the airlines are doing it.
Yeah.
So it's more of a rising tide rises all ships, because, okay, it's a concern of mine. Yeah. So the only two things that I have to look at is make sure that they're hedging their fuel correctly. Secure facilities, they know how to do it, which I don't have any doubt in right now. They've already been doing it. And then their credit card arm in terms of leveraging points and kind of garnering or bringing customers to the Southwest card. It's just all something we have to wait to see for the next couple of years. But I would say hedging fuel and the credit cards are the only biggest dropout. But other than that, it's tough to see a bull case.
Yeah,
a bear
case. And Tim just flew Southwest recently. Tim, what were the costs in your luggage?
So no cost for my luggage. And the reason was because I have the Southwest card. I have the Southwest credit card. So if you're a part of the reward members card, you get one free checked bag and one free carry-on, and I believe personal item too, as long as you book the flight with your card.
Interesting.
So like for me, Laura, and Kaden, we had free bags. Of course, they still do like free bags for like the car seat, booster seat, all that kind of stuff too. So it just really makes a demand for to use that credit card.
Have they started the assigned seats yet?
No, it's still Corral.
God, I can't wait for the assigned seats.
I think that's not till fall. Yeah.
So it's funny. I'm flying today in like 2 hours. I'm going to Boston, and I fly Delta. I'm not going to lie to you. The reason I don't fly Southwest is my wife and I hate the whole fighting over seats thing. It's stressful. I don't want to deal with it. A good friend of mine's wife is a Southwest flight attendant, and she always tells me, like, every flight we have arguments. We have delay. And she's so excited for the assigned seats. So that's something that I think that over time, and I agree with you 100%, Arlen, every airline charges for luggage. This is not going to be, people say, well, that was their advantage. But the funny part is, you look at this and you look at their revenue, record freaking revenue. Before COVID, it was 22.5. They're at 27.5 right now. Record revenue. So I'm not worried about that either. Like you said, I'm just thinking to myself, get that margin going, get that margin back up. And this is a high flying stock again. And I think it's the best airline in the industry. My biggest bear case is it's an airline. And they're starting to do things that other airlines all do. So of course I have to worry about that. Are they going to do more things the way other airlines do? So that's a very big concern of mine, but that's interesting. Well, Arlen, I really appreciate you coming on. I'm assuming that, this has changed the way you would. How many individual stocks do you own, by the way?
Let's see. In one of my IRAs, I own about 5 to 7.
Oh, good.
And then in my wife's account, I have about 10. And then in my work account, at the moment, I have 4 ETFs.
So on the 5 that you have in yours, 5 or 7, your wife's 10, are there overlap, or are they all different companies?
They're different. I do investing for a couple of friends in Ecuador, and those companies are different. but I do it more because I want them to know the name of the company. I just don't want them saying, "Oh yeah, I'll just invest in it." Like I want to have them know the company because again, it goes back to knowing the company. If you don't understand what they do, don't invest in it because it's simple.
Of course. No, it's a very simple thing. Arlen, I really appreciate you spending your time. I really appreciate you being in the community for 4 years actively. So that's wonderful. And I'm glad that we've had a positive effect, hopefully, in your life. And hopefully the market's flat for the next 10 years. You're able to come out of it with a nicer gain because of this process, and stick with it, because the true test will be when that happens.
Ooh, I have a question for Arlen.
Yeah, super happy to be around. Yeah.
Arlen, you were in our options class.
Oh,
I
that's
remember
right.
We saw you last week. We had a check-in call with Dalton in the options community. How is your options going so far since the class?
Options are amazing. Again, it was just more of I can't miss out on this, and I emailed Nick and I was like, man, I'm so bummed out I missed out. And so I got in, and it was just it's just mind blowing. I mean, it's literally the stuff like you've said in all of your videos. It's the stuff that all the big investors do. Buffett does it. Everybody does it. But just having somebody to walk through, because I went through the archives and the videos. Dalton's super helpful.
Yeah, he is.
Just the amount of knowledge that's there was just something that I couldn't miss out on. And so thankfully I do it in my self-directed my IRA that from all the previous companies that I've worked for, and that I'm killing it. I have not lost any options that I've invested in. Like I've never had an option go away that I didn't want it to go.
Wow.
Because I understand everything. So if my goal is to both sell the stock or generate some income with covered calls, great, it's done. And actually, back to that point with Southwest right now, Southwest, I think I only have about 200 shares. But I've been selling covered calls, and every single week it doesn't get exercised. So I'm like, great,
Wow.
I'll take the premium.
And the best part is it's in an IRA. That's growing tax free there. So you're not paying any tax on that stuff. That's great.
Yep.
That's awesome. Well, Arlen, thanks again for your time. Thanks for being a supporter. And I hope you do even better as time goes on. And no matter what the market does, we're here for it, because you're obviously with us during the bear market of 2022. And I'm glad you stuck it out. So thanks very much. And good luck to you. I'm sure we'll talk more in the future.
Thanks, Arlen.
Thank you.
All right. Thanks a lot.
Thanks. If we had more time with him, I was going to ask him about theta decay. And if
that's a
sorry guys, it's an inside joke, guys. And I'm just trying to trigger Paul for a second. Paul, can you go ahead and click that live coaching for me real quick?
Where is this?
Up on the top banner. So I just want to do a PSA and tell everyone that we have this class coming up. So Arlen was in our options class. He loved it, obviously getting great results from it. In fact, Paul, it was almost everyone. I'd have to check with Nick on the numbers. It was, and I think it was north of like 75% of people made their money back on that class.
Oh yeah.
Within the first month, which was insane. I believe they've all made their money back now, which is great. But so we're doing another class. One thing is, guys, if we've been having more clarity with, our messaging to all of you, right? Paul's been teaching the same things. Of course, he evolves and grows, but you've really been hearing us talk about the principle-driven investing. And so we do these surveys as people come into the community, and we kept finding that people really wanted the foundation. In fact, there was one yesterday that I shared with you, Paul. It was like insane. The guy was like, I want to get better at valuations. I want to go ahead and understand how the community and all of the tools can help me grow as an investor. And we're like, wow, this is amazing. Where's this guy coming? Where's he been our whole life? But anyways, we wanted to make sure that we have clear foundations for all of you. When you come to the community, that everyone speaks the same language. And so if you found that these 5 mistakes sound familiar, you're not alone. We've all been there. And that's exactly why we're starting this Foundations 8-week value investing coaching program. So if you're inside the community, you'll see live coaching right at the banner there. It's 14 live sessions, 8 weeks, across 8 weeks. It'll be a small group of people. You'll have sessions with Paul. There'll also be weekly accountability calls with Dalton. And it's small group coaching. It's going to teach you a repeatable process, define quality, value it sensibly, buy with a margin of safety. And so we want to make sure that you understand the metrics, the pillars, and of course the emotional side so that you can master. And of course, Paul has many, many years of experience. And so you're going to be able to connect with him in like an intimate and personal way, to be able to feel confident, sleep better at night, of course, but also we want you to have a clear direction on your retirement plan. And we're going to give you the accountability along the way. So anyways, we are having this class, like I said, 8 weeks. It's $397, but only until the end of this live. In the next 15 minutes or so, Paul, it's going up to $497. So if you're already a member of our community, we've emailed you about it, and we've had many seats being taken already. Like yesterday was a big day of sales for us, but it's $397 only for about probably the next 15 minutes, and then it goes to $497 because we're going to kick this off to the entire YouTube channel, and you'll be hearing us pitching it over the next week or two before September 9th. So starting September 9th. Oh, by the way, Paul, you get 6 months of the software with this.
Oh yeah, get 6 months of software.
Which is a complete no-brainer. So for those of you that are in the community now, $397, you're getting 6 months of the software. And you're going to be having those 14 sessions over 8 weeks. So, but like I said, it's going up to $497, and actually it reduces to 3 months of the software for the new folks. So if you're a member of the community, log in, snatch that up, just click that live coaching there. Of course, I'll drop the link inside the chat as well. But if you're not a member of the community, I would say sign up for a trial right now, and you can go ahead and take advantage of this by finding it right there at the top of the navigation. But like I said, after that, it'll be $497. So anyways, feel free. Oh, money back guarantee, Paul. If you do all the work, you show up to the classes, and you don't get the results, you don't feel like you got your value of it, we'll give you your money back.
But you got to follow, you got to do the calls, you got to do the work. That's a big thing for us. Guys, I talk about this in a lot of our videos. It's really important that no matter where your level of is investing is that we speak the same language. Certain things matter to certain groups of people, and our videos focus on, very specific parts. So foundation is really important. So check it out. Like you said, 6 months of the software for free, $397 for the next 15 minutes. After that, it's $497, but you have to be a member of the community. So if you're not a member of the community, go sign up for the trial, and that'll get you the $100 discount. Well worth it. So guys, what questions you got about what we've talked about today? Any questions? Abdul Rahman, probably not for you then. If your financial future and your mindset isn't worth $397, nothing's going to change that. So sorry you don't see the value in it, but maybe someday in the future when you've had stress and anxiety because of the markets. What questions do you guys have about what we talked about today? Big 5 tenets of our principle-driven investing. And if you haven't gotten that PDF, guys, if you're watching a future video where we mention the PDF, it'll give you the opportunity to click the link and get that PDF sent to you. Really important. I have it literally pinned up here, and I have it in my office upstairs because this is the way I think about money. This is absolutely the way I think about money. And I read that in Psychology of Money. That was a big thing for me. The Psychology of Money was awesome. Thank you, Value Seeker. I appreciate that. Thanks for signing up. Thanks for making the price better. Well, it's a different course than the options course. The options course is a very valuable course. That's why it's a lot more expensive. And
yeah. And what we found is we initially were just going to do our options and real estate investing groups and courses. And we had a real estate one back in January. That was amazing earlier this summer with the options, but we found that we needed to get this one in before. And so when we started doing that options class and seeing all these surveys and coming as we're like building the interaction with you guys, we're finding like we need to have this foundations class. So This class is where you get started, and then we'll be having another options class this fall. And so that would be the natural progression.
Yep. And yes, I did short NVIDIA, and I was wrong on it. Next. I don't know what's the point of that one. So anyway, that's the class, guys. No questions here on what we talked about. Yeah, Adobe is amazing. Adobe is an amazing business. I don't know. People keep saying that AI is going to replace Adobe. I don't think it will. Let's look at Adobe here. I mean, this is an incredible company. Let's talk about the questions about what we talked about today on the live stream. But let's do quarterly. The revenue is only up like 10% year over year for a huge company. It's pretty awesome. Adobe is an incredible company. Just got to wait for the right price. Oh, it is the right price now. $356. Damn, that's awesome. What was the low? $330. Great. All right. The link takes you to the YouTube video, not the website. Whoops. Thank you very much, JS. So Rudy, great question. There are different things. The foundation course talks about the metrics, talks about stocking, talks about all the things we do on here, understanding the numbers we talk about. Options, the covered call class has nothing to do with the fundamentals of the business. Only has to do with making extra income on your portfolio. They're totally different things. One is about learning the fundamentals of the business, how you can invest with more confidence, less stress, less anxiety, how to embrace and look forward to drops in the market. The options course, you could do them at the same time. We're not offering the options course right now. We just did one, but they're different things. The foundations is for your ability to understand value investing and the emotions and the metrics that we're all speaking the same language. I'd recommend the foundations course first, but it's up to you completely. AI will be a tool like any other thing. It's who implements it in their best business the best. I agree with you, Taylor. What do you think about? It's just like the internet was. What do you think about the long term for airlines or self-driving techs gets better? I don't know. I still think I'd rather fly someplace in 2 hours than drive there in 12 or 13 hours or 15 hours. That's what I think. So the real link is above. Now, perfectly, you all, and may the markets be green. We want the markets to be red. That's what we're trying to teach here. We want the markets to be red. 6 minutes past the hour, guys. Like I said, the 397 goes to 497 in the next 9 or so minutes. So make sure you sign up. No other questions about what we talked about today? We talked about 5 major tenets, 5 major problems that people make and mistakes they make in the markets. Thank you, Rudy, by the way. Thank you, Rudy. That's true, value seeker. You're right. And by the way, there's a lot of value to driving. You're 100% right. Listen, I'm going to the airport now. My flight's at 5:45. I got to be at the airport at freaking 4:15. It's a pain. Matthew Kelly, what books are good books to read for high concentration investing rather than diversification? If you go to my Twitter at @EMPaulG, my one pinned post is my book list. Some of them are about mindset, some about investing. All the books I recommend are there. Go check that out. We will be covering NVIDIA earnings tonight. It'll be posted on the 24/7 channel.
Yep, on this channel.
Oh, on this channel.
Yeah, it's on this channel, so sub to it.
Wait, is this the 24/7 channel?
Yeah, we're on the 24/7 channel right now.
Got it.
So if you're not subscribed, go ahead and do that, and then you'll see the NVIDIA earnings as soon as we put them out.
Awesome. All right, guys. Well, guys, thanks very much. You guys got about 7 minutes left to go sign up for that $397 to save the $100 and get 6 months of the software for free. That alone is worth $200. That one alone is worth $250. $300 alone. Thanks, guys. Appreciate your time.